How's it going, guys? How are we doing? Morning, morning, morning. Can you hear me all right? That's the next thing we need to double check. If you can hear me all right. Are we good? Can you hear me on the tubage? Good morning, good morning, good morning. Yes, 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 yes. Good morning. What's up, guys? We got there. So yeah, I'll be on the old YouTube today. I've got to jump into another server to do a stream very, very shortly. So H1 to M5 today on the low. Absolutely beautiful. Beautiful stuff. So yeah, beautiful H1 to M5 on the low today, which if you're holding runners, you're going for the 15-minute high. That's your dole. If price cracks this low, I'm going to be looking all the way down towards the old Bissy, the old 5-minute Bissy that was untouched yesterday. That was left wide open, which is all the way sort of down here. Stop's going to have to be below essentially this swing low. So if I do take it, I'll be needing to see some form of confirmation, but currently still long, just looking to come and take out the 15-minute high inside of the H1 to M5 model, utilizing yesterday's low as your low. So this inefficiently delivered range on the 5 minutes. All right, if we hop over to our 5. Inefficiently delivered. Price never came back to fair value or a discount, which has left the door wide open for your H1 to M5. So you want to enter on mean threshold. Stop has to be below the candle low that creates the M5 Bissy, which is all the way down at 56.25. However, I don't want to hold such a wide stop, so I'm being pretty tight with it. If it comes and takes out my runners, then I'll just be waiting for the open and see if we get a further stab down at the open. But at the moment, just holding runners, come and take out the 15-minute dole. So that's the 15-minute DR high, which is all the way up here at 412. And then holding a runner for the void up at 500. So that's my current goal at the moment. My current plan, my current trade. But paid inside of a 5-minute premium. So enter, break on the 5-minute premium. Potential for offset accumulation for continuation. We have the double bottom and NQ, which is usually a bullish indication if this is going to be your PDRA that holds for continuation. So for me, that Bissy you'd want to see hold for continuation. If it breaks it, move to the sidelines, likely to have one more stab lower on data.
Good morning, good morning, good morning, good morning, good morning. Let's see. Here we are.
How's it going too? You well?
Doing well yourself?
Yeah, I'm good, thanks, buddy. I'm good. Are we ready to cook this morning? We're ready to cook.
Indeed ready.
Sounds good. Sounds good. So is Josh hopping on today, or are we waiting for Josh, or what's the crack?
Oh, you can start whatever you want. I think Josh is just wrapping up something right now, so I'll be in here for a little bit, and then when he joins in, we'll swap. There's a few calls today for us on the admin side.
Yeah, sure, no problem. Let's have a look.
How's everyone doing? Chat, you good? Long time no see. We've been in the kitchen.
Yeah, so how is everybody inside the chat today? Give us a raise of hands, give us a W or something if you guys have got the X levels indicated. Just be a good indication to know who has currently got it and utilizing it, who's finding value with it, who's finding it helping them dial in their models and entries. Because it'll sort of lead how I handle this session today. WW no indicator yet. W. Oh, you can change that, Monsieur Waffles. W Aka, good stuff. So what we'll do is we'll do a brief overview of X levels again, and what it is and how you utilize it, and then we'll look at some examples. And if anything steps up today as we go into trade, we'll do that. So just give you a brief indication. Can you guys see my chart? If you can just put yes in the chat, if you can see my chart, that'd be cool. That'd be helpful. Just to make sure. Okay, cool. Because I'm streaming on multiple platforms at the minute. So I appreciate it. So where we are at the moment, this is inside my H1 to M5 model, which is you can study it. It's freely available on YouTube. I have a mechanical TS model and I have a H1 to M5 model. I've built 8 models, and 2 of them are free on YouTube. One of them is the H1 to M5, which is essentially what it seems like half the world is trading this morning. Is essentially in alignment with my H1 to M5 model. So I'll break that down for you in a second. So yeah, the H1 to M5 model. So let me just give you an overview of the H1 to M5 model, then we can have a look at how that overlays with X levels. So an H1 to M5 model is very, very simple, and there's been literally 3 in 3 days. So if you study the H1 to M5 model, you've absolutely banked this week. If you literally just traded H1 to M5 models. So the way it works is, with an H1 to M5 model, you're always looking for a sweep on an hourly candle. Okay, so this inside of a discount is a sweep. All right. So this sweep on this liquidity. The next step of an H1 to M5, and I highly suggest you take notes, guys. This is an absolute monster model, by the way. And then you align it with other contexts, whatever it is that you're utilizing to frame your context for your POI. I personally use X levels, but there's other things you can utilize. I know you guys like a stat map and that sort of stuff. So first and foremost is you're looking for the sweep on the H1. And then you're looking for it to pull and close back above that sell side sweep. Okay, so once it sweeps and closes back above, your next step is as follows. You're going to look for an inefficiently delivered range on your M5 chart. Okay, so you're going to go to your M5 and you're going to find an inefficiently delivered range. An inefficiently delivered range is this high to this low. So essentially where price doesn't come back to 50% of this range. So this is inefficiently delivered. It's very different to a pullback into OTE. It's very, very different. But this is a inefficiently delivered range. So price never coming back to 50%. So that's your step 2. And then step 3 is you're going to look for an M5 BISI inside of a discount. Okay. And that is where you're going to look to start framing your entries. Okay. So what you're looking for is the M5 BISI inside of an inefficiently delivered range after that H1 sweep. And the way that you enter on it is you enter on consequential currency, or mean threshold, whatever you want to call it, of that M5 BISI. That's where you enter, and your stop has to go below the candle low which creates the M5 BISI. Okay, now if that stop is too wide for you, you just want to wait for your confluences on that low as to why that low is going to hold. And so for me, I teach triggers inside of Red Pill Uni, and there's ways that you can define how a low is going to hold. But ultimately, you're looking to enter on inside of mean threshold of the M5 BISI. So where we've all gone long inside of Red Pill trading this morning is literally right here to the very tick. Okay. Now, the final part of your H1 to M5 model is your DOL. And so your DOL is always the 15-minute high. Okay. If you're going to trade the H1 to M5 model, it is always your 15-minute high every single time. It's your 15-minute high. So you've now got your entry and you've got your final TP above your 15-minute high. All right. Now, that's the H1 to M5 model. Does that make sense for everybody? Everyone understand that? Everyone got that? It's super cookie cutter. It's like it's easy as Larry. It's an absolutely easy model, and I can show you other examples in the last couple of days. And then you're going to try and drive out your 15-minute DOL. Okay, there's other confluence you can stack on top of that in terms of standard deviations and other factors. But if we just purely utilize it on the principles of X levels, okay? So if we look up here on the top right, this is my hourly chart. And on the top left, we have my monthly, daily, and weekly. And then down here, the lower pane is my execution chart. So this is 15 down to 1, okay? And I'm stacking my X levels across all those charts, okay? So if we just purely look from a higher time frame perspective of what has happened over, the past couple of weeks, we can get a very, very clear picture by utilizing X levels. So X levels is a price delivery framework. It allows you to get in alignment with the institutions, and it defines true premium and discount. And that's essentially how price moves between a premium and a discount, seeking inefficiencies and liquidities and price. Your job is to align your models and entries around those higher time frame points of interest, okay? In an alignment with a higher time frame X level. So if we look up here just purely on the principle of the higher time frame, and you can go down to lower time frame to find entries inside of this because time is fractal, but you can see on the weekly, this is our weekly dealing range. So this high and this low, and the X level indicator automatically populates these for you, and as they change in terms of the logic behind what creates a dealing range changes in terms of new highs, new lows put in, it will update your dealing range for you. So you don't actually have to do it anymore. It takes away the manual element. But you can see here we have this high and this low. So this is our weekly dealing range. If you flipped your weekly, which is this swing low, which put in this high that closed above a former high, is our weekly dealing range. Okay, and we have a premium and we have a discount side of that weekly dealing range. A deep premium is 12%. So we left a monster premium on the weekly, and we've come all the way back down to monthly fair value. So our monthly dealing range is the same principle in terms of swing low, which puts in a new high that closes above a former high, which is this is our monthly. We have come back down to monthly fair value. So again, inside of here is where you can start dialing in entries. This is a higher time frame point of interest. It is where the institutions can step into the market, right? Monthly fair value, okay, after a huge distribution from the weekly. Now we can go down even further. We can start going into our daily dealing range, which is this swing high, which put in this low, okay? So I now know that we have bounced off monthly fair value, all right? And so it's inside of here, inside the daily, where you can start dialing in your entries. Okay, so you can see here on the daily yesterday, we came all the way back up into a premium on the daily. This was up at 62%. So if you decided to go short, dial in your entries up on this high if you had a model which aligned with it. Again, we've come all the way back down to a daily discount, which is down at 21% inside of a daily discount. That is your daily dealing range. With inside of that, if we go even lower, we've now got our hourly. Right, so this is our hourly dealing range, this low and this high, and this is still valid until either that low gets broken or this high gets broken. So I now know that we have pinged off monthly fair value. I know that we're in a daily discount. I know that we're inside of an hourly discount. So across the board, we are in a discount. Now the principles of X levels are super simple. You want to be going long in a higher time frame discount, and you want to be short in a premium. So this is where you start dialing in your models. Like there's absolutely no hope in hell that I would be looking to go short inside of a higher time frame discount. Just no chance. I'd be looking to find my models to trade price back into a premium and have supporting context for that, right? So right down at here at 62% on the hourly dealing range is a discount on the hourly. We're down at 21% on the daily, which again is a discount. So you've now got stacked confluences with your X levels. Okay, so it's inside of here where you can start defining your models. Well, my model, as I've just taught you, is my H1 to M5 model, right? Bang off your entry inside of in alignment with a PD array in an alignment with a high time frame X level. Okay, and then all you're doing is submitting to time and price, and you're utilizing X levels to then trade back through your range. Okay, what I mean by that is, okay, well, we have, and there's other things you can lay on top of this, guys. I'm just teaching you purely the principles of X levels and how price moves. Like this is undeniable. Once you witness it, you can't unsee it. I promise you. And you just overlay your context and everything else on top of it. Okay, it becomes so simple. So this is currently on my 5 minute, but if I flip to my 1 minute, this will all start to make sense. So we've got our higher time frame POI that we've just alluded to, which is, and we've got our model. Okay, so we've got our H1 to M5 model in alignment with a higher time frame discount plus other confluences which you can stack on top of that. Okay. Now what we're looking for price to do is expand back out through the dealing ranges from our higher time frame point of interest. Okay, so I will often call this a nucleus. Okay, so this higher time frame point of interest. Okay, so what we are then looking to do from our nucleus, which is our higher time frame POI, is for price to expand back out through the dealing ranges. Okay, so if I just try and bring in this PDF, just bear with me 1 second. I'll just show you something which might help you in terms of visual understanding. See if I can find it. So this is how I look at it. Okay, well, it's not how I look at it, it's how price moves. So this would be your nucleus. So this would be your 62%. Okay, 62% on the hourly inside of the H1 to M5 model. What then happens is price moves back out through the dealing ranges, okay, seeking liquidity and inefficiencies in price. So this circle delineates a 1 minute dealing range. This circle delineates an M5, M15, H1 daily, right? In between, you have a inefficiencies and liquidity, okay, and a premium and a discount side of every single dealing range. And price will seek inefficiencies and liquidity as it moves between a premium and a discount. That is enigma, guys. Okay, so if I show you what that looks like in the charts, it's as follows. Let me just pull. Just pull this back up to make sure I still got you. So what we're now looking for is a break of structure on the 1 minute. Okay, so if I just quickly, because obviously we've moved forward, we're now on the 1 minute. And the 1 minute's over here. If we take this low and this high, okay, this is what would happen previously. So we have a 1 minute dealing range. So from your higher time frame point of interest, you're now anticipating price to range back out, okay, through the dealing ranges. Okay, so if I can find a, let me have a little circle. So if we just hypothetically look at this as the circle, okay, and then we have another one which is here, all right? Purely for the principles of what I'm trying to show you. Every single dealing range has a premium and a discount side. Every single one. I promise you. Every single dealing range. It's like completely and utterly undeniable. All right. So when price leaves your POI, you want it to take out the 1 minute liquidity. Okay. Because you've got liquidity sat above that high. In between this high and this low, you have inefficiencies. SIBI. Inefficiencies. Above this liquidity, so above the 1 minute DR and the 5 minute DR, you have inefficiencies. And above the 5 minute DR, you have liquidity. So price will move between a premium and a discount as it moves to your higher time frame POI, okay? Whatever your POI is. And for me, it's to take out the 15 minute doll, right? Which is all the way up here at 412. So you can see from here, we have broken the one. We've gone up into a 5 minute. Okay, so what often happens at the 5 minute premium is you get offset accumulation. okay, which is where price comes back into a discount of the 5 minute. So if we put a box, just for argument's sake, over the premium side and the discount side of this 5 minute, you can see that price has literally gone from our nucleus, broken the 5 minute deep premium, 88, all the way back down into a deep discount, 12. And for me, looking to hold runners to come and take out the 5 minute high and the 15 minute high. All right. So if you are trading, and the way that I trade is I'm super aggressive. So I'm a turtle soup trader. All right. So I'm entering right off this low, which is what I'm currently long off, which is my model. All right. To come and take out the 15 minute high. Now, the way that there's things which I teach inside of Red Pill in terms of how to confirm that low. But what I then do is I scale out of my positions. Okay, so I'm a scaler. All right. So what I do is, if I'm entering here, I'm simply using the principles of X levels to scale out. Okay. So what I'm looking for is I'm looking for one to go. So I'll trim. If I've taken like 15 contracts, I might trim 5 contracts here. Then I'm going to look inside of my premium for inefficiencies in an alignment with an X level to trim. Okay, so the fill on this SIBI in alignment with 88, trim, because I'm going to anticipate offset accumulation from the 5. And I have other models which you can trade from out of here. This is one of my models. It's just a straightforward discretionary model where essentially you wait for price to come back into a 5 minute premium, offset into a discount, find your PDRA inside of a discount to then target the 5 minute high. It's basically one of my discretionary models. Okay. But scaling out. So scaling inside of 5. So inefficiencies, but what's after the inefficiencies? Liquidity. So you got liquidity sat here, and then you got liquidity sat up here. All right. And so you can see prices moving from a premium to a discount, seeking inefficiencies in liquidity and price from our higher time frame POI. Now, on its own, okay, on its own, it's not enough. It's not enough. It's not enough. But you have to have supporting context for why price is going to respect this low. Okay, and that's where you start overlaying your models and your other contexts. So you need to get comfortable with the idea that, you know, that X levels is a price delivery framework. It gives you the levels in which you should be looking to dial in your PDRAs and your models, and then you overlay your supporting context over that to make it high probability. Okay, so this is a prime example of that. Okay, being inside of a deep ass discount. Being inside of a deep ass discount, okay, having a model stacked on top of it, which is my H1 to M5 model, and then once you're at your nucleus in alignment with a macro with other supporting context, now you're just looking to drive price back out through the dealing ranges, and you're submitting to time and price, okay, and you're utilizing the principles of X levels to do that, and you just trim as price goes back out through the dealing ranges, right? And those dealing ranges for me are as follows. I only use these time frames. I don't use any other time frame. So you've got your 15 seconds, you've got your M1, you've got your M5, you've got your M15, which is your bellwether. You've got your H1, you've got your daily, weekly, monthly. That is it. Okay, and price will literally just move between these. Okay. So what you want to be mindful of, and why I trim, okay, is as price moves back up, okay, through the dealing ranges, you're now coming into what is known as perceived risk, which is the idea that you're moving back into a higher time frame premium. So I want to be entering my max positions inside of a discount, scaling out en route to a new higher time frame premium. Okay, so if price gets back up to here on 50%, okay, which is essentially going to take out this 15-minute dole, this would be a sensible place for me to have my lion's share off, right? We're back at a new higher time frame POI, which is fair value on the hourly, right? So essentially that's how I do it. Now there's other things we can stack on top of this, all right? And that's, you know, they come in the form of market profiles, which are also known as schematics, and various other things we can start overlaying on top, all right? So one of the things with a sell date, and this is me going off topic on X levels for a moment, but just this is what I mean by supporting context, which gives you the confidence in your trade. Like, it's not good enough just to have a model. It's not good enough just to have a standard deviation extension target. You have to have the other supporting context, right? So on a sell day, right? Even on a sell day, you'd anticipate a sweep pre 830. We've had no sweep pre 830, like diddly squat, none. Okay. Also, on a sell day, you'd have been anticipating price to at least get back up into 50% of the London dealing range. Like, we haven't done that either. So the idea of me being bearish with these supporting confluences rules that idea out entirely. So I'd only be looking for longs to trade in an alignment with the market profile, which is to sweep the market because it hasn't done it pre 830. Okay, so that's just a supporting context, a supporting confluence as to why I'd anticipate higher prices, right? But there's various other things we can overlay on top of it as well. Okay, so the trade that I'm in, which is right off this low, which is my H1 to M5, and my TP is all the way up here. My final TP is up at the 15-minute high. That is my H1 to M5 model, okay? So when I deploy a model, I stick to that model's rules. It's very, very simple, right? They are the model rules, like the 15-minute high, okay? And we can start using standard deviations and everything else you can start overlaying on top of that, but that's not the purpose of this topic today, right? And I let price pay out, but I scale out en route. Okay, so paid inside of a premium. If you wanted to enter back inside of a discount, it's entirely up to you. Looking for price to come and scale out into the 5 and then ultimately the 15. Just relaying to a model. Okay. Has anybody got any questions? Because I'll show you some other examples in a minute. So I know I've just ranted for about 30 minutes there. So if anyone's got any questions, feel free to.
Don't be shy, everyone. Just wanted to say good morning as well to everyone because I didn't get to.
Hey, Josh.
Previously, but wishing everybody well. Please don't be shy. Please be interactive. TradeX is here to communicate with you guys.
I think someone just asked where there's the link to it. I think it was Ramsey or something, but there's the link for it. You do not consider time as a factor? Yeah, absolutely. No, of course I do, Ram. Like 100%. Time is a huge element. It's a huge factor. So macro is a fundamental part of a trigger of a buy program. Like, you always want to be around trading at a macro, but you also need to be mindful that you only get around between 3 and 4 macros a day that actually trigger a buy program or a sell program. So you just got to be mindful of that. It's not like a case of, oh, well, we're at a macro, let's yeet. All right, you got to align it with the confluence of the time in terms of your schematics, market profile, models, etc. All right. But yeah, time is an absolutely.
TradeX, we got a question over here for you. So, how do you take consideration into like the news that's relatively, like, let's say not the highest priority, let's say like a CPI or an NFP, like aside from the other news events that are not like the big well-known ones? How do you view those in the market with your framework?
Yeah, honestly, the only thing I look at news for is manipulation. Like, I literally don't care what comes out. I couldn't care less about the news. I'm purely just using it for manipulation. But unless it's a red folder event, I don't really pay any attention to it, if I'm being brutally honest with you. And the event itself, I'm only looking for it to create manipulation. Now, I do have a model for CPI and PPI. I've developed 2 models specifically for CPI and PPI. But all the others I just primarily use for manipulation. But yeah, I mean, this entry here today was super aggressive. I entered right in here pre-news, which is aggressive, right? But it's in alignment with my model. My model is fair value of an M5 BISI trading H1 to M5 model. So just anticipating this rip-off data. Now, that's a decision that I make as a trader, right? That I want to, I'm comfortable with that risk because of the gains I've made this week, right? That's a subjective question to every single trader. But for me, in terms of my model and where we sat on the chart at that given point, it was a straightforward trade for me. But I hope that answers your question. But yeah, in terms of like orange folders, yellow folders, I don't pay any attention. The only thing I really take note of is when we're in earnings season, which we're now through. So if we have like a huge earnings, I don't know, like Apple or Tesla, which is dropping after market close, I don't trade the last hour of the trade day. That's just a general rule of thumb. And then on FOMC days, I don't trade between 11 o'clock and 2 o'clock. Like price just usually consolidates within that window. But apart from that, I just utilize news for manipulation.
That's awesome. We also got one other question over here is Ramsey, I guess, is specifying is like more so about the daily bias from your indicator. So basically viewing the X levels through the higher time frame
Sure,
picture. So
sure.
like how do you view that for determining your bias is more or less probably the question that Ramsey's looking to ask.
Yeah, absolutely. So I do everything through my sort of mechanical TS model, which is utilizing standard deviations, which I've taught in a previous episode. So if you don't know what that is, then I've done a free. I've basically broken down the entire model on YouTube. It's my mechanical TS model, which uses standard deviations, and we're always working with inside of standard deviations. There's also other factors on top of that, and the most important thing that I see that people overlook drastically is market profiles, which can also be called as schematics. So it's a huge element in terms of trading. For example, today is a purge on the Asia high, right? So if you had your PDA up on this high, you're potentially trading a Judas. Well, if I'm trading a Judas, I want to be looking at the 15-minute order block underneath engineered liquidity. So if I was trading this, I would have taken it down to CE of this 15-minute order block in the principle of trading the potential for a Judas or a sell day using the idea of a schematic. So schematics is a huge part of defining daily bias. It's massive. Okay, and then you just want to know where you sit in terms of the higher time frame, right? So if we actually look on the daily where we actually keyed off from this morning, well, we actually keyed off essentially right inside of a premium, on the higher time frame here after distributing yesterday's PM high right at 62%, right in here, literally right in here is the very 62% on the daily. Okay, so inside of here is where you got breaker blocks, what have you, to trade continuation. Now you're trading a purge. Okay, you've got all this engineered liquidity. So there's so many factors that you can overlay on top of it, right? If you were sat, up here and looking at on the hourly, well, we now know that we're in a deep premium on the hourly, deep premium on the daily, right? And standard deviation extension. This is a different topic, but now you've got the purge of the Asia high, looking for price to run out the engineered liquidity. Like, this is all stuff that you learn as you go, or you can get someone to teach you. It's entirely up to you. But there's a variety of different market profiles that the market can deliver in any given day. All right. So, for example, if you were trading this day, right, this is again another H1 to M5 model. Right, this was essentially what we traded yesterday. Okay, so this here again, if you look at this sweep closes back above inefficiently delivered M5 range, M5 BISI. Okay, I was also allowing it to come down to this one. So basically, if we just give you a little heads up, if we break this current low, I'm going to be looking all the way down to this BISI. That's my last PRY for today. If we break this PRY, I'll move to the sidelines. But yesterday, the same thing. So this inefficiently delivered range, M5 BISI, this was at 50% of this inefficiently delivered range, which is neither a discount nor a premium. It's fair value. Okay, so if we just wheel this back all the way to here, just replay it for a second. Okay, so this is essentially my model yesterday. Let's see if we can get so right here is your 15-minute high. So exactly the same principle. Right, but if I go back a little bit further. Okay, so right in here is H1 to M5 model. Okay, so the same principle I'm always looking at. Okay, so you've now got your 1 minute DR and your 5 minute DR are essentially the same here. Okay, when they're the same, you're going to look to your 15 anyway. So when your 1 and the 5 minute DR is the same, you're going to look to your 15. So inside of here is my H1 to M5 model. Well, I just know that my dole is the 15-minute high. But you watch how this works. All right. Okay, so all the way back up into a premium. Okay, so this is 62% on the premium side on the 15. Right, so we've now got a new 5-minute DR. When price is extremely bullish and it's already done its manipulation, it will go outside the premium side of a dealing range. Okay, so you can start utilizing the premium side of dealing ranges to go out, right? Once price has done its manipulation, and it is super aggressive. So again, same principle, you start looking for your PDRAs in the here to align with continuation, all right? As ultimately you're looking to come and drive out the 15-minute high inside the H1 to M5 model. Right, that's just like a textbook H1 to M5. But being inside of London close reversal. Okay, so if you're trading a London close reversal, right, which is 11:30, you're going to look for 50% of the daily range. Like that becomes your target. Like it's no ifs, there's no buts, there's no maybes. Okay, so automatically I'm trading towards that. So when you're talking about daily bias, there's loads of things that you factor on top of it. So in terms of where I trimmed yesterday, I trimmed at 50% of the daily dealing range because I'm trading a London close reversal. So what I'm always doing is getting an alignment with a schematic and overlaying X levels on top of that, and then utilizing a model at that higher time frame PDRA in an alignment with an X level. And then I'm just scaling back through my dealing ranges. Okay. That's one example. Right up in here, H1 to M5 model on this day. Okay, so this H1 sweep, this H1 candle closes back below sell side. You're going to look for a 5-minute inefficiently delivered range, in this instance, inside of a premium. So if we go to our 5-minute, and we measure this range, so from this high to this low, okay, you're going to search for an M5 SIB inside of a premium, and your entry is CE, right? Okay, and your stop has to go above that candle high. Okay, so where do you think I entered on this day? Okay, but where does this align with? You know, where does it sit? Well, if we go back to here, this was 29.9%, 29.5% on the 15-minute DR. So again, aligning with a high time frame PDRA, X level, sorry. So look, right inside of here, we know that we're in a premium. We want to be going short inside of a premium. Well, we're inside of a deep daily premium. We're inside of an hourly premium. We're in a 15-minute premium. We've got an H1 to M5 model. Guys, what's the dole on an H1 to M5 model? What did I just say? 15-minute dole. All the way down here. Where do you think I TP'd yesterday? Okay, so again, if we just watch how this plays out. Oh, it's way too quick. That was way too quick. Ooh, that was rapido. Alright, so if I just flip this to a 1 minute. Okay, you watch how price works. And then what I'll do is I'll let's wait for this to load. Okay, and I've got, this is a right-sided widget. So here I have the 1 minute, I have the 5 minute, and then obviously you've got the wider 15, okay? Which is from this low to this high. Okay, so this low put in a new high that closed above a former high. All right, so we know that we're in a higher time frame premium, 29.5% to the goddamn tick in alignment with 50% inside of our H1 to M5 model. All right, you watch how this plays out. Okay, so if we go all the way back down to our entry, we'll go all the way back down to our entry. Okay, so as I was mentioning previously, this was our nucleus, right? So if I just slow this right down. Okay, so 1 minute dealing range. So what you're going to anticipate is the 1 minute dealing range to break. Okay, that's what you're seeking for from your high time frame POI, right? At which point you want to be mindful of where your 5 minute is. Okay, so what I do when I enter is I want to be breaking the 1. Okay, and that's where you can get your little 2022s. And then I'm going to be looking towards my 5 minute discount. Okay, that's the next place. Inefficiencies inside of a discount where I want to trim. Okay, because that's where you can get offset accumulation. Okay, if you're trading my discretionary model, this is where you can look to go short, and then you're going to target the 5 minute low. Okay, all inside of the principle of looking to get down to the 15-minute dole low. Okay, and then looking towards inefficiencies inside of a discount on the 15 and aligned with an X level. So again, you can start looking at unmitigated ranges. But let's just watch how this works. Okay, utilizing the principles of X level. Okay, so you've broken the 1. Speed this up a bit. Okay, boom. That's exactly where I'd be trimming, right? All the way back down inside of a 5-minute discount. So remember our principles, right? We're looking for 1 to break, and then we're going to be looking for our 5-minute discount, right? And we're going to anticipate offset accumulation, and ultimately we're looking for a price to continue down to our higher time frame, 15, liquidity pool inside of this specific model, right? This is a discount on the 5. 38% premium on the 5. So again, like you could start overlaying like, okay, well I didn't get in here, but I know I have an H1 to M5 model on the high. Okay? And I know that we're back inside of a premium. What model do I have in here where I could start looking to get in sync with this? Well, if anyone knows my models, right? Again, M5 Sibi. It's not an H1 to M5. It's a different type of model. It's a continuation model. But the same thing, right? But this is now aligned with being at 21% on the 15-minute. It's also in alignment with being 38 on the premium on the 5-minute. Okay, so a PD rate in an alignment with an X level, right? Press play. Bingo. Okay, so all the way now back into a discount on the 15. So this is now a high time frame POI. So again, you can get a pullback from here. Okay, but we're still doing the same thing. We're still just holding, but just scaling out as we move down to our objective. All right. So again, you've now got a new DR. Okay, so again, discount premium. This is new 5-minute dealing range, right? So if we hop back onto the 1. Back into a 5-minute premium. So the same principle. If this was the high that you're looking to hold, back into a 5-minute premium, looking for continuation, all in the same while looking to deploy to your final objective. New 5-minute DR. Bingo. So exactly 50-minute low. So H1 to M5, but scaling out using X levels from a higher time frame POI in alignment with an X level from a higher time frame premium, trading all the way back down to a discount. Right? Makes sense? So we've gone from higher time frame POI all the way back down to higher time frame POI, 62% on the discount. Okay, so for me, all the way down here on the daily, 12% is a deep, deep discount. So 12% is a deep, 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 deep discount. So again, what PDRAs do I have here which can support price? Well, again, I just alluded to, got my H1 to M5 model, okay, which is this little 5-minute BIS inside this discount, okay, but you have to be mindful that price can wick the candle low that creates the M5 BISI, okay, so this is currently where I have an interest for longs today, which is all the way down at 2140, which again, in terms of X levels, is going to be a deep discount on the hourly 88, and it's going to be a deep discount on the daily. Okay, if we violate that low, I'm offside. There's no way, there's no two ways of looking at it. All right, and again, the same principles. So my runners have actually been stopped there as I've just been jawboning with you. Okay, and that is that is why we scale, right? So from here into a premium on the 5-minute, okay, which was here at this given time, failed. Okay, that's why I scale as I move through the dealing ranges. to my final objective, right? So what I do when I trade, I always give myself 2 opportunities at a trade idea. Okay, so there's always 2 opportunities at a trade idea. So I'm obviously bullish on this today because I want to sweep liquidity. That's because there was no sweep before pre 8:30, like literally no sweep today, like zilch. So essentially, I'm looking to sweep liquidity that has not taken place yet. So essentially, taking out those who are holding the bag. So for me, I'm not going to do anything unless we get down to 21.39 for me personally. If it goes from here, that's absolutely fine. There's nothing for me here that I would want to trade. There is no model. There is nothing for me. Yes, we've come back down to this fair value gap from yesterday, but I don't want to trade that. I want to wait for the lower one. Does that make sense so far, guys? Have you got any questions about that? So it's a framework for how price moves from a premium to a discount as it seeks inefficiency and liquidity and price. And there's so many models that you can build with it. Like I built a number of models with it. I'm just giving you a complete overview of it today. But you can utilize the H1 to M5. You can utilize the Mac TS. Literally those 2 models alone. That's all you need. I promise you. Absolutely massive gap down today. Huge. The size of that gap. So you got H1 to M5 model, and you got a mechanical TS model. So those are the 2 free ones. Well, they're developed 8. So depending on where I am in the charts at any given time, what's the schematic, where I am, where do I sit, and if that model is in play, will be whether I trade it or not. So there's a variety of different models I can trade. But this model on this entry here on this low was the H1 to M5. So again, you can see here price coming back up into a premium. 15 minutes still here. It's just not an entry that I'd want to take in here. I'd prefer to wait for us to take out this liquidity on this hourly. I'd like one more sweep. If it doesn't, I just don't get the second trade today. I'm okay with that. Absolutely printed yesterday. So down at 21.40 is where I've got an interest today. You don't need alerts with it, dude. Like it's literally it does what it says on the tin. There's loads of different things you can change with it. So you can change the way that it's presented. Okay, so you can either have it extend lines to current price or the right-sided widget, and then you can change the width of the widget to match other indicators, and you can also change where you have these delineations, these markings. There's also, because I utilize kill zones and opening price theory, there's also that included with inside this indicator. So that is these lines. So essentially your midnight open. So your midnight open in vertical and horizontal delineation. Okay, your 8:30 price, vertical and horizontal, and then your 9:30, and that's utilizing the principles of midnight open price theory, which is price being in a theoretical discount or premium. Tell me. Yeah, and these are the kill zones in the background. So these different colors are your kill zones. So it's inside of these kill zones where I'm looking to trade, and then I align it with a macro. Okay, so if you're trading the purge up inside the kill zone, at the end of the kill zones where you can get pullbacks. So inside the kill zones is where I personally look to trade. I just don't have kill zones beyond here, apart from lunch, because it's all just self-explanatory. You're basically inside the New York PM and London close. So is it possible to add can you add column for VI and OG and OS? It's not something which it makes much sense, Ramsey, because then it's like, you know, it's deviating from what the indicator is actually designed to do, which is provide a framework for how price moves. That's essentially what it does. All right, so if you start overlaying, like, you know, fair value gaps and all sorts, that becomes a completely different indicator itself. Honestly, like if you just understand the principles, it's basically advanced market structure, but it draws it for you. It really is that's what it is. Okay, it's aligning yourself with the institutions. So anything 15-minute and above is a higher time frame X level, and so I only trade from higher time frame X levels in alignment with a PD array, and then I stack my models on top of that, and then I'm looking for range expansion from that point. Okay, but it's, you know, if you go back through it, it's how price moves. It just moves from a premium to a discount, going from higher time frame POI to new higher time frame POI. That's all it does. It's rinse and repeat. And then you just overlay your context on top and your models, whatever your models are. Yeah, so that's where you have to overlay your models. So for example, like I've just explained to you, I've just taught you my H1 to M5 model. So you want to align your PD arrays and your models at PD arrays in an alignment with a higher time frame X level. So for example, the H1 to M5 model that I traded aggressively today, right in here, was at 62% on the hourly, which was at 21% on the daily. So I've got stacked confluences on the daily, but I have my model overlaid on top. Like, you can overlay any model on top. You don't have to use my models. Like, this is how price moves. So you can overlay any model on top. That's not the point. Like, you can literally overlay any model, and I guarantee you it's going to align with the next level. I promise you. And it's so much so, if you're taking an entry and it's not in alignment with the next level, I'd be super cautious about taking that entry. In fact, I don't take it. I'll be brutally honest with you. I simply do not take an entry unless it's in alignment with the next level. You know, so I think you know, I saw a number of people, especially inside your server, who were looking to trade this today. Like, I just wouldn't have traded that. Like, yes, there's, you know, your standard deviations, etc., but there's no PD array that you're framing off. Like, you can't just use, in my view, you can't just use standard deviations, you know, in their own right. You have to understand the price action that is around that extension in order to frame your entry. So for me, having this wide M5 BISI, I know that's my H1 to M5 model. So yes, although you might have a standard deviation extension right here, you have to know what your model is that you're trading around that level. Right? It's not good enough just for me just to say, well, there's an extension level, let's trade it. Right? You have to learn to stack stuff. Right? Stack confluences. The more you can stack on top, the higher probability your trade is going to be. Okay, so to give you an indication, I'm always looking at weekly profiles. I'm always looking at what's taking place. So that is like your Tuesday low of week, for example, Thursday rally, Friday decline, all that sort of stuff. So I always take into consideration what the current weekly has done and what am I anticipating to take place on that weekly candle. So this is how you start defining daily bias. Then I'm looking at my schematics. So you got there's a host of schematics and market profiles. Asia's London session Judas, New York AM session reversal, 2 p.m. reversal, 1:30 Judas, blah, blah, blah. There's loads of them. Okay, and then you want to get in alignment with those. Okay, because they will often depict what is about to happen in price. You can literally just trade schematics if you learn schematics, by the way. Literally, you could just trade market profiles alone. Okay, so if you get in alignment with market profile, then you start going down into your market structure. Okay, so what's taking place? Where do I sit on the higher time frame? Am I inside of a higher time frame premium to go long? Am I inside of a higher time frame discount to go short? Okay, cool. Can I trade a model in an alignment with a schematic at a higher time frame POI in alignment with the next level? If you then have standard deviations which relay on top of that, my God, are you cooking? You're cooking on gas then. Can you explain the tables, i.e. one weekly, daily, 1 month in your daily? Yeah, sure, absolutely. So I use this for high time frame context. So confluence as to where we sit overall in terms of the higher time frame. Okay, so this is my monthly. So if I just expand this is your monthly dealing range. So if you go to your monthly, this low which put in this high that closed above a former high is your monthly dealing range. Okay, this is your weekly dealing range. Okay, so I have the monthly, weekly, and daily on this chart. The weekly, all right, is this swing low that put in this high. Okay, that closed above a former high. That's your weekly dealing range. Okay, so all of these opportunities, by the way, is where I was going long. I'm framing longs, shorts, all right, in alignment with higher time frame POIs and models. Literally just been doing that inside of here. I mean, look how many opportunities you've had to take a trade simply just by dialing in using X levels. Like there's literally so many. It's unbelievable. Right? This is, you know, these are the amount of trades you can take is enormous. But inside of the weekly, you've then got your daily. Okay, so the very lower, the one below that is obviously your daily. And then obviously I'm looking to see what's taking place within that. Okay, so we can see that this daily dealing range, this right here yesterday was 62% on the premium. So essentially all we did was we came from a discount on the daily and we just went all the way back up into a premium. All the way back down into a daily discount again. So what you need to be mindful of, and these are all little tips and tricks. We had an inside day yesterday. So with an inside day, 2 days after an inside day is when you get range. 2 days after an inside day. So tomorrow I'm anticipating price to either rip and close all the way back up into these highs because we've got divergences up on these highs. And we've also got weak highs. Weak highs are when price doesn't come back into a fair value of a dealing range. So all of this is suspect. And if we look up here, this is the hourly chart on the left hand side. We have a load of divergences up on the high in terms of ES taking out NQ's highs with dojis, and there's a host of contexts why price is going to drive back out through these highs. But for that, in order for that to happen, we have to hold the monthly fair value. If we break the monthly fair value, I feel like we're going to go on a carve, another carve, having gone back up into a premium on the daily, short-term premium. Okay, and then so that's my higher time frame. So I utilize that for sort of wider confluence and context. And then for Dole, I use the hourly. Okay, so over here is my hourly chart. Okay, so again, you can see that we've just been operating inside of this dealing range. Okay, just moving between a discount to a premium, back down into a discount just consolidating inside of this hourly dealing range. So until that breaks or that breaks, we're just working inside that hourly dealing range. And we have our discount and we have our premium. And that's all we're doing. Just chopping, accumulating, consolidating ahead of non-farm payroll tomorrow, which is when I'm anticipating ripskis or dumpskis. Right? So again, if you were looking inside of here, 12%, 5 and 15 is actually the same here. Align it with this rejection block. Pay yourself inside of a premium. Hold runners, take out the high. If this was your low that you're looking to hold, right? This is now a deep discount on the 15 and 5, right? 12%, stack confluence, rejection block. There's your entry. Now you're scaling out, paying yourself inside of a premium, holding runners to take the liquidity, right? If that was your trade, right? Very, very simple scalp trade, even though this range isn't scalp at the moment. The range is enormous at the minute, all right? But simply using the principles of X levels, like, you know, just that trade alone there, if you went from this 12% using this RB to come and take out this high back into a premium, you know, almost 100 points just on that alone. So 12% is a deep discount. 88 is a deep premium. I personally want lower. If it goes from here, it's just going to go before I get my entry. I'm completely content with that today. I'm not really too bothered. I'm anticipating range tomorrow. Tomorrow's the day when I'm anticipating range. Non-farm payroll. Yeah, rejection blocks 12%. That's, yeah, they are killer. Now I have a thing about SMT, so I can give you a little trick about SMT. Like I don't, and I've got to be careful because I don't want to give away too much information, but because it's not fair on members of Red Pill. But I only take a trigger on the lower time frame if NQ does the turtle souping on a SMT. So if ES does that SMT, which is what's happened on this low, I have no interest in catching a secondary entry. More often than not, you're going to get NQ coming back either to do delayed SMT, which is something which I've developed, or continue into a deeper PDRA. So the only time I allow ES to soup NQ is on the hourly chart, which I use for my mechanical TS model. So either NQ can do the soup in, or the ES can to create your SMT divergence. But on the lower time frame, so on the 1 minute chart, it has to be NQ. So I have a general rule of thumb that NQ always does the turtle soup in. It always does. Okay. The reason why it's okay to allow ES to turtle soup on the hourly chart is because we're intraday traders. So even if ES does the turtle soup in, I'm anticipating NQ to come back to that point. Okay, if ES does the souping on NQ, but as intraday traders, that pullback away from that SMT can be a trade in itself. Okay, however, on the lower time frame, if ES has done the turtle souping on NQ, and as an intraday trader, it doesn't provide me, you know, much interest to take that trade because I can anticipate price to come back to that. Does that make sense? Like if this was an hourly chart and you've got that SMT on the low, you know, this could be like a 400-point move. Whereas on a lower time frame, it's not. So price moves a lot quicker on the lower time frame than it does on the hourly. So I'm always looking for NQ to do the turtle souping, always. And so if ES does the souping, which is what it's done here, I have no interest in taking a secondary. Zero. So again, I have no interest on this low. I have no interest in taking this high. If it goes, that's okay. It's not my model. It's not how I trade. I'm fine with that. Okay, so it's just having very, very strict rules in terms of how you trade and what it is that defines a trade and what triggers a trade for you. ES souping NQ on the lower time frame is not one of those. Do you have a specific setting for your models using those indicator in your course beside the defaults? Yes, I mean, I'm always looking to be inside of a higher time frame premium to take that model. Okay, right? So if I'm taking an H1 to M5 short, I want to be inside of a higher time frame premium and align it with an X level, right? Whether that's the 15 or the hourly. If I'm inside of a discount trading an H1 to M5, I want to align it with a higher time frame X level. So again, 62% today. All right, on this particular day, this H1 to M5 that we had over on, when was it? Monday, Tuesday? Wednesday. Again, this was being up inside of a deep premium. Okay, so premium on the hourly. It was actually fair value on the daily, but it was 29.5% on the daily. So it's being inside of a premium, but align it with a higher time frame X level. So anticipating a sweep today to come and take out the high. For me, it's just not cooked yet. Like if it goes from here, it's honestly, it's absolutely fine. But with ES soup in the low, I've got no personal interest in taking it. Now, if you were short biased, right? Again, this is where you can start aligning your PD rays to go short, right? So even if you were trading a breaker block to go short, which would be a hella aggressive short, considering we've had no sweep pre 830, but even if you were, right, this is where you can start overlaying your X levels on top, right? So 79%, 5 and 15, breaker block, Sibi, Bissy, right? So this Sibi, sorry, so this is now your unicorn. Right, if you're short bias to come and drive out this low because of the divergence that you've got down here. So it depends what your bias is and what your model is, but you just want to align your entries with the next level. And you want to be inside of a higher time frame premium, so that's 15 and above to go short, and you want to be in a discount, high time frame discount, so that's 15 and above to go long. So at the moment, we're just bouncing between a premium and a discount. Consolidating, but there's nothing for me in here. There's nothing. But yeah, if anyone's got any questions, feel free to let me know. I'm here for you. I'm here for you. But what I've seen the best is when people, you know, sort of overlay their models in confluence with X levels, and you'll notice that your probabilities of your trade outcome go through the roof. Unfortunately, no TradeX. There is TradeX. Hello. You almost got my name, dude. Eesh. You're like a twin. No, unfortunately not. And the reason being is that, you know, so we have to maintain maintenance to make sure that the indicator is running smoothly. So it's kept to the lowest possible amount just so everybody can utilize it and benefit from it. But unfortunately, can't do promo codes because it doesn't make it. Basically can't support the upkeep of the indicator. You still planning on doing a video with SnapMaps for your talk? Yeah, so I've developed a model with it, and I had like a a thing with you guys. I was like, if I get to 2,000 subs on YouTube, I'll release it. But the reality is, and the truth behind it is, I just have a list as long as my arm at the minute in terms of stuff that I need to do. So it's on my list to do. It's just I just haven't got the time right now to do that. But I will be releasing one very, very soon. But yeah, I have developed a model with that, which is very, very simple and super clean. It's super easy. but I will be releasing that soon. No, they're separate, Henry. There was a discount pre-launch, but that's passed now. If I'm honest with you, $45 a month for what this thing does is mind-boggling. It's literally mind-boggling. But you know, it's up to you. I get it, cost of living and everything. But I had this thing built purely for myself, but because I utilize it fundamentally for how I trade and to get in alignment with like market structure and how price actually moves algorithmically, and that's just between a premium and a discount, seeking inefficiencies in liquidity. If you boil ICT down to its core principles, that is it. All right, price moves from a premium to a discount, seeking inefficiencies in liquidity and price. Everything on top of that is just, you know, it's just makeup. So it's essentially your backbone. So the way I look at it, it's like a skeleton, right? It's your skeleton for how price moves. What you do with that is entirely up to you. Of course, I've got my own strategies and my own models that I've developed with it, but that's not the point. Like, you can literally deploy any model, and I've seen people create all sorts utilizing it on top of it. It's how price moves, guys. I can't be any clearer. So if you literally just have it as the backbone of utilizing it to dial in your models and your entries, that's how you'll get the best use out of it. Like if you find yourself entering, like for example, in between the 262s, I call it 262s because it's just easy. But like just a general rule of thumb, it's like you never want to enter inside of here. So in between 62 and 38, you're essentially liquidity. Okay, you just have a fat liquidity on your head, right? So if you're trading inside of here to go short, here to go long, right? Without X levels, you wouldn't know that. All right, so these are little things that it gives you. Like, just don't enter in between 38 and 62. Just don't do it. All right, you just have a fat target on your back. All right, you know. So if you want it to go short, you know, seeking your PDRAs inside of here, right? But I guarantee there's some people who are looking to go, you know, dump a short in here. Like, why would you short here? No X level in between the 262s. So there's little things like that that it can help you with. So there you go. Didn't quite get my entry today. I wanted lower. I wanted to be down at 40 today. So there's no entry for me today, but I'm okay with that. So this is actually let's have a look. Yeah, like if this was your low, like if you were looking at this low, I mean, look, don't get me wrong, it's, you know, it's gone off 70.5. That's absolutely fine. There's nothing wrong with that. It's just it didn't align with what I was looking for. Okay, and you know that's sometimes the cost of precision. Like I have to have my low. I'm a primary entry trader, so I like to enter right on the low. Okay, and then I scale my positions. So with that S&T that you had down in here, but it was the wrong type with ES Super NQ. I didn't want to take that entry long. I wanted one more sweep lower. So that's absolutely fine. There's no problem. But in hindsight is 2020. The same principles. If this was your low that you're looking to hold, fine. Different model to me, but that's okay. But 12% deep discount, rejection block. All right? You just go in premium discount. You know, if you're long, go long in a premium. Pay yourself inside of a... Sorry, go long in a discount. Pay yourself inside of a premium. Hold runners to take out the high. You know, that's absolutely fine. But I just hope when you see it and you're watching this print, you get an understanding of what X levels actually does and deliver. Yeah, so you want to be mindful of fair value on the hourly. So if I was in this trade, this is where I'd be looking to pay myself. right back at fair value. So again, same thing, looking for PDRAs up inside of here to support or why price will hold that high. Again, you can start looking at your deviations and what have you to overlay on top of that. But it gives you a framework for how price moves, right? So I'd only be looking for longs inside of a discount, right? Throw on the context that we had no sweep pre 830. We're only looking for bullish price, right? We are only looking for bullish price. Today, in this occasion, I didn't get my entry. I wanted one more sweep lower to then drive higher. That's okay. The principle, though, is you're right in terms of directional bias, just missed the entry. That's okay. Right? So 70.5, if this was your area inside of a discount, this is where I'd be paying myself, right? So fair value. At this point now, you're just holding runner. So my original target today was 500, back at 500. So if you go to your 15-second chart, you've got a void at 500, which is right in here. That's my objective for today. So if you're holding runners, which is essentially going to take you all the way back up into a premium on the hourly, so 38. According to the dealing range log, it happens instantly once conditions are, sorry. How quickly are those range drawn or marked with the indicator? Yeah, so it's constantly updated, dude. So as soon as the logic behind it is created, it'll update. Like, so it basically tracks the dealing range as is. So the reason why the 5 and 15 hasn't changed yet is because the 5 hasn't closed above that high. So essentially what could happen here is this candle could wick all the way back lower and you'd still be inside the same 5-minute DR. It wouldn't have changed. It only changes, right? So a new DR is only put in when a candle is a swing low is put in that closes above a former high. Good stuff with there. Nice. Good stuff, Lick J. Good stuff, mate. So you'll find that there are so many models out there that align with X levels, and that's because they will do. It's because they will do, right? It's a framework, guys. It's how price moves between a premium and discount, and these levels are where price is respecting, right? You know, the X levels on every single dealing range. So your job is essentially to hunt which X level to frame your entry off. It really is that simple. And then overlay your models and your context on top of that to support. And then once you've got your entry, that you're then driving back out through your dealing ranges. So you can see how that's now updated because your 5 minutes now closed above. So you've now got a new swing high. Let's put in close above the former high. You've got a new 5-minute DR. $15 is still the same because it's not closed above. And you'll see on here, this is the 1-minute widget. So this is my 1 minute, this is my 5 minute, and then this is my 15 minute. So this is my execution pane. This is my dole. And this is my daily bias.
Wonderful. Does anyone else have any other questions as of now? I think that we've been doing a pretty good job being very inclusive, answering any questions that people have. So please don't be shy. Personally, I believe that was a nice rejection block schematic. And just rocked the delivery right there, right at 10 o'clock. So
yeah, absolutely. Yeah, really nice. If you took it, did you take it, Josh?
No. I'm on stream. I'm I'm watching you guys. So
Yeah, but yeah, absolutely perfect. Yeah, perfect example. If that low was your low to hold, beautiful entry, really really nice. So aligning your PDRA breaker block, sorry rejection block, 12%. Eat.
and the reason why I say like just fractal delivery again, you can just see that also smacked like pretty much CE of that 1 hour rejection block. So you literally just have that same fractal printing on a lower time frame, and that's what my eyes personally saw when we were on stream.
Yes,
And
sir.
if it happens inside of a macro, that's it's pretty nice.
Yes, sir.
Does anybody have any questions on that specific fractal delivery on like what I mean by seeing that? Like, please don't be shy because that's a huge light bulb moment if you still have not understood that. So, Castle, take a look at your 1 hour chart that's on the screen, and you can see that that long wick right there around 12 o'clock. And you can see that the CE of that wick, the bodies like to respect that. And the moment that you can see that at 70.5, that area on the 1 hour DR is where you also have a lower time frame create the same exact price structure at 9:45. So look to see how those fractals are created. So when you have a higher time frame point of interest and a higher time frame understanding, you can take a rejection block, extend that out on time from a higher time frame or any other PDRA, and then look at your lower time frame to look for the same exact repeating phenomenon. And that's exactly what printed.
Beautiful stuff.
And of course, you can go look at your daily CE of the wick as well. And that's pretty much now like 3 supporting factors.
So again, you can see we're consolidating. So what I personally don't do is enter in between 62s. Okay, so I scale into them or TP at them. So you can see here, this would have been your entry into fair value, which is essentially where we are, which is a new higher time frame POI. There's every chance we continue out here, right? But this is where you'd want to be scaling. So this is new higher time frame POI. So this is a nucleus discount 70.5, right? Scaling out back into a new higher time frame POI, which is fair value. So this is where I'd scale. If you want to hold runners to push through to get back up into a premium, that's cool. Nothing wrong with that, which is essentially what I'd be looking to do if I was holding my runners, but I'd certainly be trimming in here, which is why we're now essentially chopping where we are, was because we're at higher time frame fair value. But there's no entry from here. I just do not enter here. Like if you enter here, you just have liquidity on your back. Okay, so again, utilizing X levels to filter your trades. All right, because the temptation might be, oh, let's just pile in here long. Like I just don't do that. Like if I miss the trade, I miss the trade. It's very very simple. Like I just don't chase. Like if you chase price, you're gonna get caught. Like you want to be in and scale out versus trying to chase price. If you miss it, you miss it. Chalk it up. There's nothing wrong with that. Like today, I personally missed it. No problem with that. I took my H1 to M5 this morning. Took that for 60 odd points, and then my runners got stopped. But yeah, this 2500 would be my final dole today. Just want to be mindful that you've got non-farm payroll tomorrow, which is where you're going to anticipate the range to come back into the market. 2 days after an inside day. I'm not sure, Kay. Not sure, buddy. Not studied gold back. I wouldn't know.
Okay. All right. It looks like we've answered the majority of the questions, and I would like to just see if there's anyone else that has any outstanding questions. Uh, as we continue, obviously, seeing this delivery, just, understanding that the candle for an hourly chart will look to close, and obviously the subsequent candle will look to have some sort of retracement, and then you would have some sort of swing in the market before some other further expansion could take place. So, as of right now, I think it's a good time to kind of just talk about anything else of outstanding questions, um, or anything else that anybody wants to ask us.
Yeah, if anyone's got any questions, feel free to let me know. Otherwise, I'll probably just call this stream here today because I've missed my entry today. But I hope you get an understanding or a clearer picture of X levels and what they can deliver for you and how they can help you dial in your models and entries. So just a brief overview again. You want to make sure that you're framing your entries from a higher time frame PD array in line with an X level. So whatever model it is you're deploying, you want to be around a higher time frame PD array in line with a higher time frame X level. Okay, that's 15 minutes and above. And then once you're from your nucleus, you're then going to trade back through the dealing ranges, okay? And you're going to move back up into a new higher time frame POI. What you stack on top of that is entirely down to you, okay? Now, obviously, I teach a whole host of stuff, but obviously everybody trades slightly differently. But there is 1,000 different ways you can utilize it for your advantage. But I promise you, it's how price moves, okay? From a premium to a discount, seeking inefficiencies in liquidity and price. That is ICT, okay? And the X level indicator defines true premium and discount on any time frame. Okay, so again, if you are on from this morning, we were anticipating price to pull back, no sweep pre 830, also with the principle that price hadn't got back into 50% of the London dealing range. So even if you're trading a sell day, you would anticipate price to get into 50% of the London dealing range. We had not done that. So for me, automatically wanting to be bullish because taking out those who are essentially holding the bag from shorts from the AM session, waiting to align my entry with a higher time frame POI. I was personally greedy, wanting slightly deeper discount down to 88 on the hourly. This is where I wanted to be because we had an M5 BISI which was left open on the low inside of my H1 to M5 model, which was left open from yesterday. So personally, I didn't get my entry today, but that's okay. That's absolutely okay, but the principles remain true. If this was your low that you were looking to hold, then utilizing the principles of X levels to dial in your entries, and you could witness how it worked here today. So essentially just going back into a premium, back into a discount. This is where you'd get your offset accumulation. Deep discount is your 88 and your 12. Now you're just going to drive back out through your dealing ranges, pay yourself inside of a premium. Now you're going for liquidity and inefficiencies. Next was your 15-minute high, and then beyond that you've got your hourly fair value, and then finally back into a higher time frame premium. So you've essentially gone from a discount to a premium from a higher time frame POI, right?
Awesome.
Yeah.
Really, really appreciate you being here at TradeX.
No
I appreciate
problem.
everyone else that is over here in the audience as well. I know that we can probably do maybe one giveaway if you want to do that. I think that would be kind of cool.
Yeah, you can do. I don't mind.
All right, so let's do one giveaway for everyone else that's here, for an opportunity to get a part of the X levels. So we appreciate everyone's support and being here today. So this is a small gift back to you guys.
I've
Just
got
a chance to enter.
Josh, I've got people on YouTube as well. So is there any chance we could do something with a Twitter post? So I just quickly do a Twitter post.
Yeah, that'll work. That's fine. However you want to facilitate it, it'll be okay. Just let me know. We'll do 1 month of free access, and then the individual can go over there and test it out. And given they like it, we'll be happy to hear their feedback.
Okay, so I've just done a.
Always looking to improve.
Okay, so what we'll do is we'll do a spinner wheel on anybody who likes and comments on this post. Okay, and then it's fair for everybody. So if everyone's on YouTube, if you go to my Twitter post, and I've just put how are you finding X levels, and you just like and comment on that, or you can go here me just put that inside the chat. So there's the link inside the chat. So if you just like that and comment that, you'll be entered into the draw for a free month to the X level indicator. So I will also just get a Twitter picker up. Twitter picker. Okay, so here's the Twitter picker. All right, all right, all right. Okay, so
All right.
currently there's 11 of you in it so far. You got to like and comment. Well, there's actually 3 of you. So you got Erwin Romano, Tony Mode, Henry L, Trader Ed, Castle. You guys. Who else we got? Who's involved? Sylvia Guzen, Masmel, Benwin, Goated. I know Benwin's got it. Go on, Benwin. Kashan, Pano. God, some of your Twitter names are hilarious. Pano XBD, love that one. Viliqualant, good stuff, guys. So I'll just give it another 30 seconds. So if anyone wants to jump involved or get involved with the X level indicator, just make sure you go and smash a like and comment on that post, and you'll be entered in. Let me do just sort these out. All right, so copy the link. Ooh. Oh yeah, wrong spot. Copy link. There you go. I won't load it yet. I'll give you another second. So win account 1 must follow. Yes sir. Oh no, we won't do must follow. Be cool if you do though. But I don't mind if you don't. Description. In fact, we'll take profile ban off. You don't even need a profile picture. You don't need a description. You don't need a banner. We'll open it to the masters. Okay,
We'll give it another 25 seconds. And there's a little bit of a delay on YouTube, so we'll give it like 30, 35.
Why is that not working? That Twitter picker is dead. I don't got a good Twitter picker. Twitter picker. Let's do this one. In good faith. Goodbye. They're going closed down. What's going on with Twitter pickers? Twitter pickers.
All right. Well, we got the backup here, so just let us know.
Scan that puppy. Okay. I don't know what we're doing here, but we're going to run with it. Okay, so here we go, guys. I'm ready whenever you are, Josh.
Good.
So who's going to win it? Panos, XBT. There you go. There you are, Panos.
Shout out to you.
Happy days. There you go, my friend. Congratulations.
Panos, are you here? I see him typing. Yes, he is.
What's up, Panos? Well done, buddy. So, guys, if you want to learn more about X levels, obviously I've done episodes on YouTube which you can jump into. There's also my 2 models which I've spoken about today with you, which are the H1 to M5 model, and then you can also learn my mechanical TS model. I promise you, if you want to learn in addition to your standard deviations, I'd highly suggest you watch that model. And yeah, if you want to give us a sub, that'd be much appreciated. Love you all. And if you do utilize X levels, there's obviously a community inside of Red Pill which you can jump into, or in here, which I believe. So if you want to have any questions for me at a later date, I'm all ears. I'm for you. I'm here for you. I'm here to help. Okay, so if we look at where the price just get to, 2A tick on the hourly, 2A tick. to a tick. Where have we got to? 38%. To a tick. Okay, so the same principle. So that's a beautiful example of going from a higher time frame discount, trading back through the dealing ranges, having context to support, moving back up into a premium, a new higher time frame premium. Beautiful stuff. All right, just utilizing X levels to do that. Yesterday, H1 to M5 long, 15-minute high, back into a premium is where I took it to. H1 to M5 short on this day, taking it down to a discount. So essentially just going premium, discount, premium, discount, premium as we consolidate ahead of non-farm payroll tomorrow. So personally, I missed my entry on the low today. No problem with that. I took a trade this morning during London, so I'm not too bothered. And also the H1 to M5 model. But yeah, I hope you learned something today and you find it valuable. And I promise you, if you understand X levels, you utilize it, and you just have it sat in the background in your charts, and you overlay your models on top, I promise you, you're going to find your executions become more accurate. And you'll get a better understanding of actual market structure and how price moves. Right? The fundamentals of market structure, which is premium, discount, liquidity, and inefficiencies. All right. So that's going to be it for me today, guys. Take care. Love you all. And if you need me for anything, just holler. All right. But take care, guys. Look after yourselves. All right.
Take it easy, everybody.
But be good.
Appreciate you being here.
Take care, guys. Bye-bye. YouTube. Also YouTube. I'm going to jump back into Red Pill now. So I hope you found that useful on YouTube as well today. But I'm going to hop back into Red Pill. Okay, so take care, guys, on YouTube as well. Didn't quite get the entry on the low today, but no bother. And I'll see you very, very soon. Take care. Avash.